Ivan Feinseth, Chief Investment Officer at Tigress Financial Partners. Sarah did such a great job. She always does, looking at in-depth at these companies. You had a thought on Lyft versus Uber, right?
Well, Lyft has a tremendous focus on healthcare transportation, where they provide people who can't get to the doctor rides to the doctor, to the hospital for regular routine.
So you like that one better?
I do like Lyft better. I think, first of all, there's the opportunity to take market share. I mean, they are both growth opportunities in further penetration of the $1.2 trillion a year spent on ground-based transportation. Also, Lyft just became the official rideshare provider for Disney in Florida and California.
All right, that's it. That's the deal closer right there. All right, so Ivan, give us your market thoughts these days. I mean, we have Fed, China, tariffs. How are you feeling about the market? Are these buying opportunities?
I still believe the dips are the buying opportunities. It's unfortunate that President Trump kind of went again in the crazy town with the new tariffs proposed on the $300 billion worth of mostly consumer goods, which caused a sell-off a few weeks ago. But I think that is a buying opportunity because you have Q2 corporate results were not as bad as expected. It was not what the bears thought would torpedo the market. And despite what President Trump says about Powell and the Fed, we've never had a more market-friendly Fed, and the Fed is solidly on the side of the bulls. They are willing to cut rates when stocks are at record highs and preemptively try to avoid any kind of slowing in the U.S. economy.
So, I wanted to ask you, you mentioned Trump with the tariffs, right? And the threat of tariffs since September 1st, 10% more tariffs on Chinese goods. But the idea here, right, is that now he can at any time tweet, right?
He could turn this market with a tweet.
You know what? I'm going to push those off. In fact, I'm going to cancel those, or I'm going to make them bigger or smaller. I mean, doesn't that almost give the president some ammunition on the economy and the market, much like what we say when the Fed has more or less ammo? Isn't that a good thing to help him?
Well, nobody really likes the volatility.
Nobody likes the volatility, but at least now he sort of has a little bit of an upper hand. Yes, he could turn this market with a tweet. He could say, now that, because the Chinese trade delegation is scheduled to meet in Washington in September. And if things start to progress well, he could pull back. He said, I feel good ahead of the upcoming meetings. I'm not going to let these tariffs go into effect. I'm going to take a wait and see. The difference is that he has assessed tariffs on about $225 billion of mostly industrial goods, steel, aluminum, things like that. The $300 billion that's left is primarily consumer goods. It's clothing, shoes, toys, consumer products. And that could be more negatively impacted by could more negatively impact the economy. All right.
And the situation is, if the economy's good and the stock market's good, Trump gets reelected. If it's not, he's going to have a hard time.
Well, he's going to probably make sure that it's good because he wants to. He's that kind of guy, right? We'll see. We have to wait and see. That being said, Caterpillar and Boeing, two names that have been somewhat controversial, right? Boeing has its own headlines, 737 MAX. Caterpillar is a global story. In fact, I heard some negative comments on Caterpillar today. But you think these are both good buy the dip opportunities? Absolutely.
Both those two companies are the largest U.S. exporters and get negatively impacted if China assesses tariffs. And Boeing has the issue with the 737 MAX, of which I believe they will have the software test finalized and ready to go back in service in September, and we should see the 737 MAX flying again by the end of the year. And then Boeing will ramp up from, right now they're at 42 planes a month to back to the targeted 57 planes a month. It is their key plane. It's the best-selling plane and the future of the company. In airlines.
Those are two buy the dip opportunities. You have another dividend-paying stock, right? AT&T. That's a good one for you. You like that one for the longer term?
6% yield, and I think has a lot of upside as they monetize their acquisition of Warner Media, which they are doing with the launch of HBO Max, which will be a direct-to-consumer streaming service. With the rollout of 5G, they'll be a huge beneficiary of the rollout of 5G. With their new edge computing partnership with IBM, they are a big Internet of Things, IoT play. And nobody's cell phone bill's getting any cheaper.
And nobody, I think a lot of people don't realize that they're an Internet of Things play,
Yes.
the way you're saying it. And you're right, the cell phones aren't cheap. So another good one in your opinion. Last but not least, you were talking about consumer electronics. We think of Garmin. You have
Yes.
another one as well.
Dolby Labs. Dolby Labs got hit
Dolby
over
Labs.
this whole Chinese things too, because Dolby is benefiting from all of these blockbuster action adventure movies that they provide sound and visual or video enhancement
Right.
to. So they're the ones that do that give that all these action movies that rich feel of the sound and the video that you see, and they are benefiting from that.
When you're in the movie theater, it's intense.
Yes.
Yeah, and we can see the stock's been beaten down, Ivan. So is that one of the reasons why you like that one as well?
Absolutely. They are really a royalty play. They invented all of this audio and
Right.
video enhancement technology starting in the 70s with dynamic noise reduction that would eliminate the hiss on cassette tapes, all the way to the audio enhancement that we have today. They also are in consumer products, TVs, laptops, cell phones, everything that has audio. They help create a more richer sound.
I think you're a music buff. You must be a
Yes, I
music
do like
buff
music.
to actually to know all that. I mean, do you prefer a record, an LP, or
No. I like the
digital
convenience
music?
of
Okay.
digital music.
Last but not least, Garmin. Garmin is an interesting name, right? Great products, but a lot of competition in that space, particularly in wearables.
But I think they have a lot of competitors, not a lot of competition.
Why?
They are so technologically advanced and such a clever and innovative company that they are so far ahead in what they offer in their wearables and the integration into so many other platforms, including the Garmin Connect application that integrates with other fitness tracking applications. It integrates with their bicycle computers, and the heart rate monitor, the oxygen sensor. The smart wearables are going to continue to evolve to be a key point of how people track and monitor and manage their health.
So when the market pulls back like it did on Monday, right, we were down 767 points and fell even further overnight. You say to get in and pick up some of your favorites. So are you
Absolutely.
unafraid? I mean, what's going to be the telltale? I know that you had a low end range on the S&P 500 that you're looking at for technical analysis. If we break down below that range, does your bullish call change? What is the range? What are you watching?
The near term, if we break below, let's say 2790, the next stop's probably in the 2600 range. Yes, so it's going to go lower, and in theory would be a better buying opportunity. But the trend in corporate results was pretty good. There was a slight downturn in earnings, but it was much less than expected going into earnings season.
Right.
And companies, on average, are still beating. 76% of companies reported beat their quarterly results by almost 6%.
Yeah, are you surprised that this quarter is ending up to be a positive one?
No, because there's still a lot of positive momentum. Consumer sentiment, even though it's dropped from a high of an 18-year high, it's still at a 14-year high.
Right.
The consumer is strong. Employment, we are at a record level of employment, either a 50-year low in unemployment, but since there are more people working today, we are at a record level of people earning, making money, saving money, contributing to the economy, and consuming.
What was your first album that you ever bought?
Probably embarrassed to say it was probably either the Partridge Family or the Osmonds, because I just turned 29 for the second time last month. But.
Well, mine was Billy Joel Glass Houses.
Yes.
That was my favorite, my first album I ever bought. All right, Ivan Feinseth, Chief Investment Officer at Tigris Financial Partners. Great to see you. Thanks for joining us on the show.